Hey guys, welcome to my first ever recording for this YouTube channel for how to use your tax-free ISA in the UK. Now, I see a lot of people giving trading advice online, particularly in the US. I see a lot of people giving crypto advice. I see a lot of people sharing their opinions. However, I haven't really seen much in the UK. I haven't seen much about how to effectively use your tax-free ISA and also just using relatively low risk good growth. So that's what I'm going to talk to you about on this podcast. So it'll be a weekly video to talk about, hopefully to educate you all about what is upcoming in the next week and what has happened in the previous week. And hopefully from that you can learn about trading and make better financial decisions. Now, anything I say on here obviously is meant for advice only. I'm not telling anyone what to do. I can show you what I've done, but I'm not telling people what to do. So why listen to me? So I day trade and I long trade. I started my tax-free ISA 2 years ago, which is one of my trading accounts. And this year I've made about 13,000 tax-free. And so, as you can see in the top left, I've got 45k in here. So I'm not an amazing trader. I don't make enough to have a living. Hopefully one day I will, but I don't currently. So I'm here just giving advice for solid, stable, low risk trades about what I do and what you can do too. Now, when we start trading, we've got to think about basically what we want to do and what we want to achieve. And part of that is thinking about what's up and coming. So if we look at the S&P 500 currently in QQQ, which is a measure of tech, we can see that tech made all-time highs last week. So if I go on here, you can see $522 a share. I'm recording this on Monday, that was last week. That's all-time highs for tech. So if you're asking yourself, tech generally, is this the right time to invest in tech? Well, yes, it's very bullish at the moment, but equally it is making all-time highs. So be careful to manage your risk. So if we think about what's in the upcoming week, so in the upcoming week, we have the inflation core CPI data report that's coming to the US on Wednesday. Now, why do we care about the US data inflation in the UK? Why do we care if the price of goods goes up, price of goods goes down in the US? Because the US is the biggest economy in the world. The US has a massive play on everything that goes on around the world and what is going on. And so it's important to know that on Wednesday, this is coming up, the inflation rate is coming up, because this can have a massive impact on the stocks. So let's talk through it. So on Wednesday, they will release it. I think it's Wednesday at midday. And so the actual, basically, what the actual inflation will be, we don't know. So the previous, you can see here, 2.6%, consensus 2.7%, forecast 2.7%. So what that means is that in the previous month, inflation was 2.6% for the previous 12 months. And the consensus is that it's going to go up, so to 2.7%. Now, you might say, okay, it's going up, what does that mean? So what really matters is not what it does. What matters is the outcome of it and whether it did what people thought it would. So what does that mean? So technically it's 2.6 last month, going up to 2.7 this month. If it comes in at 2.7, so consensus means what people's predicting. So if they predict 2.7 and it is 2.7, the market has already factored into the share price that it's 2.7, and therefore I wouldn't expect to see a massive pullback or a massive gain on the markets. However, if inflation was to come in at a lower rate or a higher rate, you may see a change. And why is inflation important? So inflation is important because it all relates to interest. So Jerome Powell, who's the chair of the Federal Reserve, he obviously wants to reduce US inflation and US interest rates. So if we look at interest rates now in the US, I think they're 4.75 or something. So they were going up and up and up in between 2022, 2024. They've been held steady during 2024, and only recently has it started to come down. I think it went from 5.5 to 5, and now 4.75. Now, why is this important? If interest rates come down, businesses can borrow more money, and therefore shares tend to go up because the economy is looking better. People have more money to spend, mortgages go down, everything goes down, people can borrow more money, everything. So what do we want to see? We want to see interest rates go down. Now, for interest rates to go down, inflation has to go down, because that's why inflation was put up in the first place. And I can make a separate video if people want to talk about that or think about that in more detail. And there's lots of other good videos online or articles where you can read about why interest rate and inflation are related. So in essence, to counteract increased inflation, the US puts up the interest rates and vice versa. So if we can see inflation come down, then hopefully interest rates will follow, and then in turn shares will go up. However, it's not quite as simple as that, because all these companies and people have already factored this into the market. So if the market's already factored in, then it's going to go down. Then if it doesn't go down, the market will react badly. And if it does go down or does stay the same as what is predicted, then the market may not change that much. So that can be confusing, and it took me maybe a year to get my head around that. And it's even more confusing with the job reports that we can talk about another time. But it's really important to know that. So I guess what you should think about is on Wednesday, the inflation is meant to come in at 2.7%, which is the consensus. If it comes in higher than 2.7%, that's bad news, and the markets are likely to go down. If it comes in at 2.5% or lower, that's good news, and the market is likely to go up. Now, again, it's not as simple as that. There are lots of other factors, but essentially, I would be very surprised is those things didn't happen. So if it went up, if it came in above, markets go down. If it came below, markets go up. So what does that mean? So me and you, we don't know what's going to happen. We don't know if interest rates are going to come in, or inflation is going to come in higher or lower. So all we can do is prepare. So we have to prepare for that. And the way we prepare for that is by having a low risk stake. The number one rule of trading, don't just try and come up with a trade and do it for the sake of it. It's all about risk to reward. You have to think, what is the risk and what is the reward? So if I was to place all my money in a share now, relying on inflation rate to come in lower than expected so that it goes up, that would be silly. Because if it goes, it's basically like gambling, like roulette. The best thing you can do is trade to the market. So wait and see what happens, because markets tend to overreact. And I'll give you an example is that if inflation rate is higher, markets tend to go down. They might gap down for, say, 1%. You can buy in, and then it'll come back up to the average and maybe make 0.5%, 1%. But be careful is all I'm saying is, don't just go all in or do whatever. Just know these things are happening, know what makes a change, whatever stock you pick, know what is happening. Okay, so now that we've talked about the main event of the week, I'm going to talk about, just pick out a few stocks that may be worth looking at the moment and have a think about what you want to do with them. Now each week I'll talk about different stocks, talk about the pros of them, talk about the cons of them, and talk about why you might think about trading them. And equally, I can make videos on specific stocks, on their balance sheets, anything really. Just let me know in the comments what you would like to see. So, Bitcoin. It's important to note. So Bitcoin you can't trade on your ISA, which is tax-free ISA, UK tax-free ISA. So again, I'll make a video on that. You can put in £20,000 per year into your tax-free ISA, and any profit you make on that is not taxable. And that's really important to know, because if you put in 20k one year, 20k the next year, 20k the year after, you're making profits of 500, 600, 100, £50 a month, you're not paying any tax on that. So it's essentially tax-free money. And so if you can earn £5,000 a year, say, on your tax-free ISA, In your job, if you're paying 20% tax, you'd have to earn £7,000 or £8,000 a year more. And so essentially, it's a really good way of boosting your income by doing a little bit of trading here and there. But again, what I said before about is low risk strategy. Okay, so stocks I'm going to talk about this week. So we'll just pick out a few. So we'll go Amazon. So Amazon has made all-time highs recently. So if you look on the 1 day, 1 week, 1 month chart, it's made all-time highs, and it just keeps going up and up and up and making higher and higher highs. So let me ask you, is this a good time to invest in Amazon? Well, the answer is yes and no. So is Amazon a great company? Yes. Will it continue to improve? Yes. On the long term, will you make money? Yes. Is now a good time to invest? Probably not, because it's at all-time highs and it's trading, well above what it was even a month or a week ago. So is it 10% better than, or 11% better than last month? Probably not. So what you got to think about is now the right time to invest? No. Try not to invest in things when it's all-time highs. Try to buy the dip and just play it safe. So I would say Amazon's great stock. If you held it long term, you wouldn't make money. Is now a good time to buy? No. Tesla, again, let's look at Tesla. So Tesla, since Trump got in, it's rallied and rallied and rallied, and it's now approaching all-time highs. So 380, 385 a share. It's gone up in the last 3 months, 80%. Now, do we think that's actual value? No. I see a lot of people ask me, should I buy Tesla? And I say, maybe you should have bought Tesla 3 months ago, but now, no. You've missed the train. And it's important to know when you've missed the train and not to basically get FOMO and just make a trade. One of the biggest things people can do is get FOMO. Okay, so other stocks, let's think about this. Microsoft. So again, Microsoft up quite a lot recently. All tech is up quite a lot recently, as we talked about at the start with QQQ. So we've got to think about what value stocks there are. Right now, potentially Uber is a value stock. So Uber, I'm actually slightly invested in Uber myself. In the last week, Uber has gone down 8 or 9%. It went down to $64 a share. It's flattened out nicely, and hopefully we want to see signs of recovery. Now, I have money in Uber. I only have a bit of money. I don't want to have too much money. Again, you're not fully invested in anything, but you got to think about the long term, and I can do a separate video on that. Nvidia, again, another one that's a stock that was massively overhyped last year. Now, it's obviously a great company, but do you see value in it now? And these are all things to think about. And I can talk about them all more in each detail in the future. Okay, I think I'll leave it there for now, but thank you for listening. But I say the main things you should think about watching this video are, firstly, if you're in the UK, tax-free ISA. Secondly, think about what's happening in the US. Think about the earnings reports. Think about their CPI data report and inflation report, which is coming on Wednesday this week, and how that may impact the market. And think about your position that you take. Think about if it was to go down, what would happen? If it was to go up, what would happen? If it was to go down, could you tolerate that risk? If it was to go down by 2 or 3%, could you tolerate that risk? If it was to go down, could you then buy more and average down? Or would you be feeling really bad and not be able to sleep at night? These are things you've got to think about when you trade. You can't just go all in on a stock. You've got to spread your risk and play it safe. Now, finally, if I talk about what I did last week, what stocks I did. So last week I made around 300 after the fees on various stocks. So Vanguard was something I bought and sold. So I actually bought Vanguard at, I think it was around 90.5 a share and sold it at 91. I bought Microsoft. I bought it, actually I should have kept it because I ended up selling it, but I bought it around 4.25 a share, and then sold it at about, well, it's actually about 4.35 a share. Made a few £100 on that, and they're the only trades I took last week. So again, although I'm a day trader, although I am basically sort of buying and selling quite a lot, I'm not doing loads of trades. I'm not trying to be that person that makes $10,000, $50,000 a day. I'm trying to be slow and steady, low risk, and think about building equity. And again, once you build equity, it will come back to you. So thank you for watching this. Hope you enjoyed it. Again, it's my first video, so I didn't really know where to jump in. If anyone's got any suggestions, let me know.